Inflation has been the story of the week, with central banks around the world finally making moves to rein in soaring price levels. The US Federal Reserve announced its first rate hike since 2018, raising the interest rate by 1/4 percentage point. But with a conflict between Russia and the West, some economists fear that tightening the money supply could lead to a recession in the US and Europe.
I think from an inflation perspective, it's probably very, very necessary. With US inflation at 7.9%, the last time it reached that level in the early 1980s, interest rates were nearly 13 or 14. So US interest rates are still very, very low, you could argue, relative to where they've been historically at this time. Equally, there's more debt in the US system. As you say, we have the geopolitical concerns in Eastern Europe and the knock on effect of those of higher commodity prices and particularly higher fuel prices that could slow the economy down. So it is a difficult balancing act.
And as we just heard, US consumer prices in February rose by the fastest rate since 1982. In response, the US central bank expects to raise rates 6 more times this year. And things in the UK aren't looking any better. Inflation there is also rising at its fastest pace in 30 years. The Bank of England has hiked interest rates twice in recent months.